Good afternoon and welcome to today's In Conversation with Dr. Sherry Cooper, sponsored by FCT. I'm your host, Eddie Cocciollo, president of Dominion Lending Centers, Inc. Dominion Lending is made up of over 3,000 mortgage professionals right across the country with access to Canada's best mortgage rates. Whether you are buying your first home, refinancing, self-employed, moving on up, or downsizing, with access to hundreds of financing options, we can find the right fit for you. If you are not using a DLC mortgage expert for your home finance needs, you're probably paying too much. Visit dominionlending.ca today and find a mortgage expert near you. Dr. Sherry Cooper is Dominion Lending Center's chief economist. She is a sought-after speaker, writer, advisor, renowned for her ability to simplify and demystify the complex subjects of economics and finance. She was executive vice president and chief economist at BMO Financial Group with responsibilities for economic forecasting and risk assessment. She comments regularly in the press on financial issues. Sherry is the author of 3 best-selling books, The Cooper Files, Ride the Wave, and The New Retirement. Also on dominionlending.ca, click on Economic Insights for Sherry's very insightful articles on the latest economic trends. Hey, Sherry, how are you?
I am uncertain.
So it's funny because when we last spoke about a month ago, I said, hey, this is great. We're going to have Dr. Sherry Cooper on the day after the election to talk about the results. But you said, Eddie, I don't think there's going to be results. It's going to be in limbo. And of course, you are right.
Yeah. Unfortunately, too bad. The pollsters led us astray again. It appeared going into it that we might have had an early evening if Biden was able to nail down Florida. But that did not happen. And so it looks like it's going to be at least until the end of this week, until they've called all the states. And then already the president has asked for Wisconsin to recount. And that evidently can't happen until another week or so. So it's not very different from when it was Gore versus Bush, and we went through U.S. Thanksgiving not knowing who the winner was.
So it looks like it's sort of neutral right now, but there is some activity in the markets. So is there any implications of this stall on the economy or the economics of North America or Canada?
Well, other than everybody having one form or another a nervous breakdown, Americans feel very passionately about this election, whether they are supporters of Biden or Trump. And it's been unnerving. And a lot of people feel, combine that with the uncertainty around COVID, it's not good. It's just not good. Now lawyers will probably make a whole bunch of money because Trump's already trying to throw it into the courts. And I've gotten countless requests for money to support the Save Biden campaign. But in general, it's not a good thing, but it's not unusual. Unfortunately, the U.S. is so polarized, and so many states are at a knife's edge, whether they're going to flip from Democratic to Republican or vice versa. One thing, though, we have seen is that there's very little chance now of Biden having a Democratic Senate. And that's huge, because if he wins, but he's lost a few seats in the House and the Senate is still run by Mitch McConnell, he's not going to be able to do many of the things that he has said he would do. And so, that in itself means we wait until the midterm elections, which is 2 years from now, and see what happens. But All in, I'd have to say that other than the oil patch in Canada, where they might breathe the sigh of relief if Trump wins, because he might approve the Keystone pipeline. But if he were going to do that, why hadn't he already done it?
Right, exactly. Yeah.
So
yep.
it is what it is.
Yeah. So as we go through this, if you have questions for Sherry, you saw the scroll go past there. Just go ahead and ask them on Facebook or Twitter Live. Dave, our producer, is in the background monitoring questions. Get them to us as soon as possible. So let's talk about some Canadian economics.
Yeah.
One of the things that I wanted to talk to you about is quantitative easing. We know that there's been some pullback on the quantitative easing, and there's been some rumors that's going to affect rates. Can you clarify for us what does that exactly mean? So the quantitative easing on its own and the pullback, will it affect rates?
Okay, well, quantitative easing is just jargon for the bank's purchases, the central bank's purchases of bonds in the open marketplace. And now that they've taken overnight rates down to what they consider to be their effective low, the only other way they can stimulate the economy is to buy bonds, different kinds of bonds, in order to add liquidity to those particular bond markets. And when COVID hit and we went into a lockdown, they introduced major investment programs in a wide array of different securities. So bankers' acceptances in order to reduce the cost of funds for the banks so that the banks would pass on lower mortgage rates. They purchased Canadian mortgage bonds so that there would be liquidity in the mortgage market so that mortgage rates again would fall. But the biggest program of all was what they did in terms of the announcement that they would be buying $5 billion per week of Government of Canada bonds.
Right.
Then what's happened recently, since mid-October, the bank has, as they say, quote, recalibrated the QE program. What we've seen is a big decline in the purchases of Canadian mortgage bonds, repos, which is also a way banks raise capital, and as well, the whole system has already seen enormous declines in interest rates, and markets are functioning. So they announced that as of the end of last month that they would cease buying Canadian mortgage bonds and repos, and it doesn't have an effect on interest rates, because the reason they stopped the program is because there was very little take-up for the program.
Right.
The banks didn't really need the money. The liquidity was there. So, and they also announced that they would be buying $4 billion worth of bonds weekly in the Government of Canada market rather than $5, but was very clear that what that meant is they believe it would be equivalent financial stimulus. So it's not that they're trying to see rates rise. In fact, they're trying to prevent rates from really collapsing. So the other problem that they see is that the Canadian bond market is actually quite small, because we ran budget surpluses for so many years and we paid down debt. And the good news is that we started this COVID crisis with the lowest debt to GDP ratio in terms of government debt of any country in the G7. But that meant that with our central bank buying bonds at this very significant pace, the Bank of Canada already owns almost 40% of all outstanding Government of Canada bonds. And so they announced that they would no longer be buying what's called the off-the-run bonds. Those are the ones that are older bonds that trade those are the least liquid, and that instead they will be buying the benchmark bonds, which are the new bonds that are issued each week. Well, there's an optics thing with this, that opposition parties, particularly the PCs, have been raising a red flag about the Bank of Canada is basically funding the Trudeau government spending. Okay. And it's, they're saying they're printing money, and that's a risky thing over the long term. And it is true that the Bank of Canada is buying these bonds in the open market. In other words, they're not just shoveling them on the balance sheet straight from Department of Finance to the bank. They're buying them from the dealers, the bond dealers. But nevertheless, it is true that they are financing this government debt. But it's like, given what's happening with COVID and the economy, there's enormous justification for this, and every other central bank in the world is doing the same thing.
Right. So just before we get to COVID and it's what's happening with that in the market, I just want to make sure it's clear that just because they've slowed down, it sounds like they slowed down the quantitative easing, they haven't stopped it, doesn't mean rates are going up. What you're saying is that the banks don't need that liquidity as they did once before, which is good news, and rates should stay pretty much low. And what's your prediction on how long you feel rates will stay where they are, Sherry? How much time will it take before things recover and you see rates go back up?
Well, the Bank of Canada has promised that interest rates will remain low until 2023.
2023.
So, in other words, they suggest that if things go according to their base case for COVID, and we can talk about what that is, that interest rates will remain low, particularly, the overnight rate, through the end of 2022. And what they assume about COVID, and this is really important, is that they are assuming that COVID will not be under control with widely available immunization and treatment, meaning a vaccine and treatment, until mid-2022.
Okay.
So remember, that's not June of next year, that's June of the year after.
Yeah.
So, and they've gotten pretty good at predicting the impact of these rolling lockdowns on the economy. And, whether they're right or wrong about COVID itself is is anyone's guess, because no one knows, not even the public health experts know when a vaccine will be available, or more importantly for us right now, how bad will it get over the winter? It was widely expected there would be a second wave, and there is. And most experts suggest that it's going to get worse before it gets better, and that we will probably see some relief in the spring and summer, just as we did in this year. But being indoors, the cold weather, all of that around the world has led to a significant acceleration in the number of cases. And we are better at treating COVID than we were. They've learned a lot about the disease, but still the number of deaths is rising as well. We're nowhere near the peak. We are at the peak of cases since the pandemic started, but not at the peak of the number of deaths.
So let's talk about the correlation between, this economy that's sort of driven by COVID, these businesses that are affected by COVID, but yet we're seeing record prices for houses. Just today, the report was saying that the value on a detached home is up 39% compared to, in the city of Toronto, compared to last October. 905, they're up 18%. I look at Calgary and Edmonton, they're up quite a bit. Also, Vancouver, you're seeing, up 29% compared to a year ago. So even though we're struggling with, some of these businesses, unemployment, and there's these effects on the economy, we're still seeing housing prices rise. Can you give us an idea of, first, what is affecting this rise in housing prices, and also where do you predict this going? Is it going to be further rise in housing prices? Will it slow down? What will slow it down? I know that's a lot of questions. I apologize, but tell me a little bit about what your thoughts are around this. Some people say crazy housing values in some of our cities.
Well, Eddie, I think that part of it is the most interest-sensitive sector in any economy is residential real estate. And so this drop in interest rates, a precipitous drop in interest rates and record low mortgage rates, has boosted the demand for housing, and in fact has allowed many people to qualify for homes that they couldn't otherwise have qualified for. So that's part of it. Another major factor is that as we went into the spring market, we shut down the economy. But prior to the COVID lockdown, it was widely expected across the country that this would be a record spring housing market. So what happened is, for 2 months we were locked down and not much activity happened, and then when things opened up, at least began to open up, there was enormous pent-up demand, and that has taken us straight through the October numbers. In addition, with so many people working at home, being at home, so many children doing remote learning, being at home, many households reassessed their housing needs. Many who were in small condominiums wanted more space. Many people who were working from home actually realized that in the future, they can still work from home even after the pandemic. And so why not move further away from their job? Because if you only have to go in 1 or 2 days a week, it's worth it to get way more for your money being in an exurb. And so we saw a lot of reassessments, people moving out of condos or out of city centers, and that's still happening. Now, where there has been some softness in many markets is in the investment in condo space, which is typically those investors buy relatively small condominiums and put them into the rental pool.
Yes.
And many are indeed concerned about the efficacy of that kind of investment, because over the course of all of this, for many reasons, we've seen rents decline and decline for the first time in the last decade in many markets. And largely because there hasn't been the net in migration of people from outside Canada. Foreign students haven't been coming. And of course, all, with the border lockdown, we don't see the immigration. Now that is going to change going forward.
Sure is.
Still a major factor that was not in the cards. And so what happened, the other thing is that tourism dried up. And many of the smaller condo units were in the short-term rental pool with Airbnb, and all of those are not rented. So some of the owners have put it into the long-term rental pool, which has driven down rents. And many are wanting to sell. And not only that, but many investors who are buying prior to the actual building of condos that bought a year or two or three ago, many of those condos are coming on the market now, and people are trying to get out of them.
Yeah.
Sure. So, put all that together and you see that there is a softening in part of the condo space. So
before we get into immigration, because I want to talk about that, you talked about reassessing your housing needs. Many on this call right now are looking at maybe making that move, and also maybe are at a higher interest rate. It's really important that you call your DLC mortgage broker and get a pre-approval or a financial checkup. You can do that. You can find a mortgage broker in your vicinity at dominionlending.ca, find an expert, and they can help you assess your situation, get you pre-approved. You're maybe in one city that, conditioning on financing may not be an option. So you want to be sure that you qualify if you're doing that move. Or maybe you're at a higher rate. Maybe you're at 2.5 or 3.5 or higher, and you want to see what it looks like to be at the 1.8% rate. What your penalties will be, just like the siren saying, right? It could be an emergency. I guess that's coming from you, Sherry, but
it is. That's another ambulance running down the street in downtown Toronto.
So let's talk about immigration, because you brought that up. The Liberals, I think it was last week, announced that they are going to increase the immigration numbers that they regularly have. I think it's going to be up to 1.2 million in the next 3 years. And I can only imagine that's going to stimulate even further housing, and it's going to stimulate even further all of that, what's connected to housing. What are your thoughts on the immigration, and what will be the net effect of new immigrants on housing?
Well, it has been a major component of the increasing demand for homes, and I mean for rental properties as well as for purchase homes over the last decade. And the Canadian population is not growing by just based on native Canadians. Canadian basically birth rates and death rates are pretty much balancing out now. So the only way to grow our population, which is a huge component of growth in the economy, is to attract immigrants. And we've been very, very successful at that. And that just unfortunately was disrupted by the global pandemic. And so if we can begin to open up our borders and people are willing to transfer, and all of that requires a lot of lead time. But certainly for 2021, we'll certainly see more net immigration than we did in 2020. And that means, people have to live somewhere. And whether it's people that will purchase or people that will rent, it still tightens the market in general.
Yes. And in the immigrants that do come in, there is programs, special programs that banks have through the insurers. So if you're listening right now and you're wondering what you can do as a new immigrant, again, contact one of our brokers. They'd be more than happy to walk you through what that program looks like and see if they can help you purchase and live that Canadian dream of home ownership. So let's talk about. I guess the bank meets again next Wednesday. with the strength of the housing market, do you see any changes happening with the bank's decision on anything?
Well, they just met last Wednesday.
Last Wednesday, sorry. Yeah, last Wednesday.
Yeah. So, and they did not, the things they did is what we just talked about, recalibrating, quantitative easing, but they did not change the overnight rate, nor will they. At one point, Tiff Macklem, the newish governor of the Bank of Canada, was badgered by reporters saying, you'll never go to negative interest rates. And he said something like, well, never say never. Well, media reports seem to take that as a window that we might get negative rates. But when a person says never say never, it's generally to suggest that that's not in the cards as far as he can see.
Yeah, I think he said something about toolbox or something.
We can assume that overnight rates are basically set at 25 basis points, which is, incredibly low. And he keeps repeating that if there were to be negative interest rates, it would be very disruptive for the banking system. So I don't think that will happen.
Okay. So, and the other thing that we've heard a lot about is this deferral cliff. So the idea that banks allowed mortgage customers to defer their payment for a period of time. I think it was 6 months. That came to an end just recently. There was some reports that it may cause, a uptick in arrears in mortgages. That was the whole idea of the debt deferral cliff. But we really didn't see that happen, did we?
No, and in fact, the proportion of mortgages outstanding that have been deferred have been declining, even before the end of the deferral period in some cases. And as well, when you look at the macroeconomic data, you see the savings rates for Canadian households have risen sharply, and that deposits, personal deposits at the banks, have risen sharply as many people who ultimately could have been paying their mortgage payment every month decided to take the opportunity to defer and then stockpile the money just in case. And those people have started paying their mortgages, and we still see the savings rates high. So people are being very cautious, but now it varies in terms of province to province. The province that has the highest deferral rate is not surprisingly, is the hardest hit province since mid-2014, which is Alberta, where the latest data from CMHC in August estimated it to be about 19% of mortgages outstanding were deferred. That compares, by the way, for 8.9% in Ontario and 10.3% in BC. So, and we know with oil prices are relatively low and likely to remain low for an extended period. Let's face it, people just aren't traveling. The airlines are, running on practically no passengers, and demand for oil worldwide has hit rock bottom lows. So, and that's regardless of who's president in the US. So there isn't a lot of sunshine for the oil sector and in any time over this pandemic period.
So you talked about stockpiling deposits, and those people that maybe have money to invest. There's always this notion that real estate always rises. What would you say to someone that maybe wants to invest in real estate? And is it a good time, even though you see record-breaking housing prices? Would you say it's a good time? And if you are looking to invest in real estate, you should be contacting your mortgage broker to make sure that it is the right investment for you according to your risk factors. But Sherry, what's your comment on that, on housing right now, and if it's a good investment?
Well, Firstly, there's no way I can give blanket advice to everyone. It depends on their particular financial situation as well as where they are in the life cycle. But there's opportunity. There's no question there's opportunity as some speculators or investors want to get out of deals that they'd already made. I'm sure there's some real bargains to be had. But clearly it's you got to have more than a 6-month time horizon to expect that you're going to get a rental rate sufficient to cover all your carrying costs, depending on what region we're talking about.
Yeah, absolutely. Absolutely. We have a question for you, Sherry, so we're going to bring it up now from Raz Ali. Hi, Sherry. Do you have any insights on planned housing starts going into 2021 to keep up with the pent-up demand in the major centers across the country?
Well, yes. I mean, housing starts have been pretty strong, and there's no question that the government, CMHC, is very concerned about the affordability of housing and providing more affordable housing. So I think we will see housing starts continue to be a positive for the economy. But it's certainly not going to be booming. But the immigration, if we see immigration, let's say by 2021, 2022, that would certainly boost new housing construction as well.
Thanks, Riza. Appreciate the question. That's our friends from Fiskard. Great question. So Sherry, what else do you see that may affect housing coming? Is there anything else that you predict that may affect in a positive or negative way coming to us, in the near or distant future?
Well, one of the things that we've seen in this whole pandemic period is the hardest hit sectors of the economy are typically low wage earning sectors. Mm-hmm. So I'm thinking about hospitality sector, the whole travel sector, the airlines. These are sectors that are really hard hit, and the wage rates there are relatively low, and those people cannot work from home. And that's part of the reason why those sectors have not rebounded, is because they're the sectors where it's very difficult to physical distance and maintain control over the pandemic. And so what we've seen is this, the gap between rich and poor is getting wider. And so the low wage sector are people that are typically not homeowners. And that's part of the reason why housing has been one of the contributors to growth in the economy, even during this very difficult period. But it does mean that those who can least afford it are getting hit the hardest. And that's why Canada has introduced all of these transfer payments for people to maintain a living income from employment insurance or the CERB before that, and as well protect them from being evicted, able to pay the rent. But let's face it, there's a lot of very insecure people, even food insecure, people that have never been to food banks before who are lining up, and that's a very sad and scary thing. And especially the other part of this is it's impacted women more than men because of the childcare issue.
Yeah.
So it's tough. It's very tough. But I do think, though, that the government is not going to do anything to jeopardize the housing market at this stage, because it's like, it would be like biting the hand that feeds you. And their forecast for 2021 is that the housing sector will continue to be one of the significant contributors to overall economic expansion.
Yeah, sure will. And the silver lining I see is for those sectors where rent has, decreased quite a bit. Hopefully that's helping those people, get into a situation that's a little bit better,
Yes.
paying less rent. So that's a silver lining there. We have another question for you, Sherry, and it's from Christine Madrick. Dr. Cooper, do you think that there will be any changes to qualifying rate? Good question.
Well, yeah, they have moved a little bit. They went up, they went down, and then they kind of have edged up a tiny bit. But it is a very sticky rate by design of the big banks. The big banks, they post their mortgage rate. Of course, that the posted rate is not the actual contract rate for most mortgages.
Yeah.
And they keep it artificially high because they want to protect the risk involved in making loans. So they have purposefully made it tougher to qualify than what market-driven mortgage rates would allow. And remember, before COVID started, they were going to alter the qualifying rate, and it was going to be the weekly average of actual contract mortgage rates. And then because of COVID, they said, no, never mind. So we're still back in the system where the qualifying rate is a few hundred basis points higher than the actual 5-year contract, 5-year fixed or 5-year variable contract rate.
Thanks, Sherry. We have a couple more questions here. The questions are coming in. By the way, if you have a question, please don't hesitate to ask. We'll get to Sherry as soon as possible. We have a few minutes left here in the broadcast. So here's a question from Paul Riley. With all the fiscal stimulus from the Bank of Canada, do you think at some point in 3 to 6 years we are going to be experiencing significant inflationary pressures? Great question. If yes, do you think we will go back to the mortgage rates as we saw in the early 2019 or higher? And what's the correlation between inflation and real estate? Thanks, Dr. Cooper. Wow, there's a lot of questions there. Sherry, do you want
Well, inflation is extremely low, as measured by the Bank of Canada's statistics and statistics from the government. And yet, house inflation is quite significant. So the correlation isn't big, obviously. The thing about inflation is it's a lagging indicator. And it requires not just a one-shot increase in price, it requires a sustained increase in prices. So in other words, 2% annual inflation, which is the bank's target, is a sustained aggregate inflation price increase of 2%. And the way that happens usually is as the output gap, the unemployed people and the unemployed capacity utilization of our existing factories and offices and retail real estate, when that tightens, when we go back to full employment, you begin to see upward pressure on wages and upward pressure on prices, or at least that's what used to happen. And by that, I mean in the 1980s and the 1970s. But since that time, technology has led to a massive decline in many prices. So, flat screen TVs used to cost a fortune, and now you can buy them for far less and a far better TV. And that's true for so many other products. In addition, what has happened since then is global production of everything. And because the emerging world has far lower wage rates than the developed world, a lot of production has been shifted to low wage rate areas, which keeps price pressures downward. And then following that is we've seen the massive development of discount sellers like Walmart or Amazon, and they put a lot of pressure on their suppliers to cut prices.
Yeah.
So the competition for the consumer dollar is enormous. People can easily compare prices, and so and there is so much excess supply right now of both land, labor, and production capacity that nobody is asking for wage increases. So there's no rolling impetus that would raise inflation, and certainly low interest rates hasn't done it.
Yeah.
So even when we had full employment prior to pandemic, we saw wage increases in Canada year over year of shy of 3%. Mm-hmm. And, union power is much less than it used to be because, again, the export of production to other parts of the world. And we've also seen a huge movement towards online shopping and an increasing use of artificial intelligence, which includes robotics in the production process. So the big fear of 1979 to 82 type inflation is yesterday's story. Now, budget deficits also were a big problem back then. And in Canada, they were a big problem until the mid-90s. Right. Until we introduced the goods and services tax and significantly cut government spending. And so a lot of people are worried about these big budget deficits. But again, firstly, interest rates are at rock bottom lows. So why wouldn't the government be borrowing money at, they're borrowing money at less than half a percentage point.
Right.
And secondly, if they weren't stimulating the economy, you can imagine how deep the depression would be. It would be far worse. So, and that's what's happening in the US, by the way, is that people it's been since August that people have had very little income support, even though there's pandemic, and no rent support. And it's been a very sad scene for particularly those who can least afford it.
Yeah. My dad keeps reminding me about his 18% mortgage, the one TV we had in our home, right? Because you just couldn't afford those luxuries. They were so expensive. But yet we have TVs in every room today, computers in every room today.
Right.
So forth with
in our pockets as well.
Yeah, so, exactly.
And on my wrist. So
I get reminded as well that NASA, back in the 80s didn't have the computing power to nearly as much as our handheld phones today have, which is
right.
Just mind blowing. We have another question for you, Sherry. So here it is, Jason Nugent. Thanks, Jason. How long can we see the CERB and the other income supplement programs really continue? Good question.
As long as they're needed is honestly the answer that the Bank of Canada would give you, what the Trudeau government would tell you. What happened is now they've rolled all the income supplement into the employment insurance program, and the CERB program has ended, but the EI program now covers many more sectors than it used to. So self-employed people are covered, as well as those who had been working for a large company, small business owners, that kind of thing. It's there isn't a limit. There isn't a ceiling above which or beyond which we just can't go. Mm-hmm. But for sure, the sooner this pandemic is behind us, the better it is. in terms of financial and economic recovery. But we all know that. And it's not an either or. It's not, well, if we just opened up the economy and the job market would bounce back immediately and we'll deal with the fallout of sick people. It doesn't work that way, because if you end up with a massive surge in sick people, which you would if everything was unrestrictedly opened up, people would be afraid to shop. People would be afraid to leave their homes. And that's certainly not good for the economy.
We got a couple more questions, Sherry. It's we got about 12 minutes left here. So this is from Aftab. Thanks, Aftab. The average income in Canada remained pretty stable, with qualifying rates dropping very little and increasing house prices. How are borrowers getting mortgages approved? What's your thought on this?
Well, the qualifying rate has fallen a little. And there are lots of families and households that are not stretched with debt. They don't get any attention, by the way, but 40% of homeowners don't have a mortgage.
Right.
You know, and also boomer parents or grandparents are willing to help out with the down payment. And as well, if you are in a professional job or a finance job, or you work for companies that continue to allow you to work from home, and you're a 2-income, no kid household, then you can afford to buy property.
Yeah.
And people are moving further away from the ultra expensive properties that are within the city center areas to less expensive, more distant homes.
And everything's relative, right? So if you're moving up and you're a move up buyer, then you obviously have gained the same equity that you're going to be able to put down on the next home. So there's that part of it. And if you're a move down buyer, it's hopefully you're getting out of debt and you're trying to get in a situation where you don't have a mortgage and you're downsizing. So those are other ways that people are moving around and qualifying.
And also, if you're a homeowner already, and let's say you're in a small condo and you buy something that has more space, if you got your mortgage a few years ago, your monthly payments could well be lower than in your current space.
Yeah. And Julie Jeffrey made a good comment as well there. And if you are in need of this kind of advice, then I would strongly recommend you go to our website, dominionlending.ca, connect with one of our mortgage professionals who can walk you down on the qualifications and what you need to do. That's a great idea, a great start to plan as you purchase, if you're moving up, moving down, or if you're a first-time home buyer. There is another question here, Sherry, for you. So it's, when do you expect government deficits have an effect on interest rates?
Well, the Bank of Canada is keeping interest rates low. The Bank of Canada has complete control of the short end of the yield curve, and the longer end of the yield curve has more market influence. So if we were to say the US, let's say, rebounds dramatically and the economy starts booming and inflation picks up, then US interest rates would be, longer term interest rates would be rising, and Canadian rates would inevitably tick upward, although not as much as US, if our economy were still in the shape it's in. Mm-hmm. But with the US caseload of COVID, and I mean, so many states are hitting record numbers of cases and serious capacity issues in their hospitals. I just do not believe that the economy is going to be super strong and rebound ahead of the Canadian economy in any kind of dramatic way.
Right.
Even though they have opened up more, at least in some regions, than in Canada.
Yeah, and you brought up that good point. If they are open up and people are scared to go shopping or scared to stimulate the economy, but you're still having the effects of the disease, then it's smart to just have those rules in place so people can stay safe, and then we can recover from the economy when the time is right. So let's go to our next question, Sherry. We got another one here. We have about 8 more minutes. This is from Lily. Hey, Lily. Question to Dr. Sherry Cooper: do you see there will be GSTHD increases in the next couple of years? Our tax man, are they after us, Sherry?
No, that's a consumption tax, and the last thing they're going to want to do is tax consumption when they need people to consume more. But what they will do likely is go after high income earners. And you know how Biden's been saying that tax rates won't go up for any household making less than $400,000 a year. I think that there are Canadians that very much would like to see a tax on billionaires, a tax on multimillionaires. Some have even talked about a potential capital gains tax on residential real estate. At some point, these budget deficits will have to come down, and part of it will be, of course, much stronger economic activity, much more employment, the end of all of these transfer payments and supplemental payments. And another part of it will be probably a soak the rich kind of tax regime. So they talked about raising the capital gains tax rate on financial securities, all of these things. Highly political, very much, no question, very much a politician's argument in one degree or another. But one thing's for sure is nobody's going to increase the tax rates on middle class and lower income families. And that includes the GST, because those people pay a much larger percentage of their income in GSTHD than rich people do.
Yeah, absolutely. So we got 2 more questions. I want to get to as many questions. We really appreciate your time here, Sherry, and obviously our audience is looking for your advice and your insight. So when do you think the government will come after homeowner sale equity, and how will they implement it? It's funny, I heard you say it, and I said,
talked about that. I just said that. That's one factor that I've heard even from people in the mortgage business, that's something that the government will consider. And probably it'll be, for homes over X million dollars, and for people, going after residential primary homes, not investment properties, but going after the capital gain in your personal residence is a very unpopular thing.
Yes.
And certainly not happening while there's a big recession. But I can't say, never say never. It's what happens in the US, by the way, is there are capital gains taxes on residential real estate if you don't roll into another property within a certain period of time. And so what happens is people roll into more and more expensive properties, or into, even when they're downsizing, they can roll into, small bungalow out in the exurbs to a downtown condo that costs nearly the same amount. And another thing they do in the US is over the age of 55, you get a break on that. So because it's very well known that many people's retirement nest egg is, a good deal of it is in their residential real estate equity. And you certainly don't want to drive people into the poorhouse in retirement.
Yeah, and
it's a complicated issue.
Yeah, there's not too many tax breaks you get as a Canadian, and the principal residence one is just such a blessing for just what you said, the retirement, and hopefully the government doesn't tax that, but it'll be sad if they do. But hey, That's why we get to vote, right? These are definitely things that you'll be able to vote on. We have a few more questions. Let's try to do like sort of rapid fire.
Okay.
So we move back. And do you see the government will spend more money on the large construction projects to help employment in the near future? So
I think they'd like to. I know Chrystia Freeland believes they should, and certainly there's so much infrastructure need of repair. I mean, if you just drive around, like the potholes are ridiculous.
Yeah, absolutely.
I'd like to see that. I'd like to see, improvement in Wi-Fi everywhere and those kinds of things.
Yeah, infrastructure spending is always good because it does two things. It helps obviously, rebuild our roads and save our cars from potholes, and then employs people and puts money back into the economy. Okay, next question, Dave, from Nancy Ingram. Hey, Nancy, do you think that Biden will kill the Keystone Pipeline and rejig the save face with his statement? It does seem a good decision after all that's been spent. And if he does, how will that affect Canada?
Well, we've already talked about that. Yes, I do think he will. But Obama certainly did. I mean, he denied the Keystone Pipeline, but Trump hasn't agreed to it either. So,
right.
I don't know that who wins the election this time, it makes much difference, especially given that the Senate is going to continue to be Republican.
Yeah, there's going to be that struggle, right? Even though Biden or Trump wants to do something, there's always going to be that sort of push and pull because of the Senate. Okay, how does the government plan to pay for all these programs they are offering right now? So
they're issuing government bonds, and the Bank of Canada is buying them.
Yeah, and they just that's it, right? And they get to profit from that in the future. Debbie, oh wait, was that a question? Sorry, Dave. Yeah. Oh no, it's just saying thank you. Okay, so do we have any more questions, Dave? If not, I want to wrap up. It looks like we're done. So first and foremost, a couple of announcements before we thank and say bye to Sherry. With the Level Up program, that's with Gary Morris. We have two fantastic guests coming up. This is open to everybody. We have Barb Stegman. She's going to be fantastic. That's on November 12th. And then on November, I believe it's 24th, not even close, we have Michael Gerber, The E-Myth, one of the most fantastic books you'll ever read. You want to definitely be in that. And these are sponsored by our friends at FCT. Dr. Sherry Cooper, always a pleasure.
Thank you
so much for being with us. It's so awesome every time we speak. There's so much to talk about. We could probably speak for hours.
Right.
You will be back next month, and hopefully we can sort of follow up on the election, and then you can give us insight on everything and anything else that's new. Please, 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 if you're looking to buy, get a pre-approval, looking to upsize or downsize, you're maybe looking for a refinance, whatever it is, contact one of our mortgage experts. You can go to dominionlending.ca, and they'll be more than happy to help you. Thanks everyone for tuning in. Until next time, we'll see you then. Take care.